How much home can you actually afford every month using an FHA loan on the average salary in the United States? Well, that's what we're going to discover today. So let's first of all talk about why people love the FHA loan. It is a common misconception that FHA loans are only for first-time homebuyers. They actually are for any buyer, and it's actually a great way to get a lot of people into their next home. Why is that? Well, there's a few reasons. First of all, FHA has lower credit standards, so you can have a lower credit score than you can with a conventional loan, for instance. FHA also allows for a higher debt-to-income ratio, so you can carry a little bit more debt than you would be able to on a conventional loan and still get into a new home with FHA. FHA actually has a pretty streamlined refinance program, so if we're falling into lower rate environments, it shouldn't prevent you from getting a home now, so you can go ahead and refinance later using an easy product. Another reason people like FHA is because there's actually a pretty easy refinance with an FHA loan. So when rates do come down, you're going to be able to get that new rate without too much hassle. One of the reasons I really like FHA loans is it allows people to get back on their feet sooner if they've had a bankruptcy or a foreclosure. So within 2 years of discharge, you can get an FHA loan, and contrast that to a conventional loan, it's 4 years. So that's 2 full years that you could own a home and start earning equity. That's a lot sooner, and that's going to go a long way to your net worth. So FHA loans are backed by the government, and every year the government reviews their guidelines on FHA loans, and it's very common for the guidelines to be updated with new loan limits. So if we are in an escalating housing market, which we have been for quite some time, every year the FHA adjusts the loan limits, and typically they're going up. So this year that loan limit just came out, and I'm going to link below. You can check out your county because it's actually county specific. So if you live in a very high cost area, let's say, Hawaii or Los Angeles or New York City, your FHA loan limit is much higher. If you live in a low cost area, then the FHA loan limit is going to be lower, and it's going to be more appropriate for where you live. In 2024, the average loan limit for FHA is $498,257. Why such a random number? I really don't know, but it's based on their calculations, and that is the number. So your loan amount cannot be higher than that. That doesn't mean that the house cannot be higher than that. That just means that's all the loan can be. So let's take a look at what the average salary in the United States can afford with an FHA loan. Now, I just want to give you a disclaimer. In no way does this mean that you would qualify if you made this average salary. There are so many variables that go into qualifying somebody for a mortgage loan. I cannot possibly do them all on a YouTube video, and no one else can for that matter. So if you really want to know what you can qualify for, you need to reach out to a lender. I encourage you to contact me below. We are licensed in 45 states with my company, so I'm sure there's a chance that we can help you where you live. Okay, back to our example. According to the US Census Bureau, the average family in the United States makes $75,000 a year. So what are we gonna do? Let's take a look exactly what I would do. The first thing I'm gonna do is I'm gonna pull credit. Now, a note on credit scores. You may have heard that FHA allows you to get a loan with a 500 credit score, and technically that is true. But with a 500 credit score, you're going to have to put way more down than you would with a 580. So for the purpose of this video and for every loan, you're going to want to try and get to a 580. I did make a video in the past all about FHA and credit scores, so I'm going to link to that. Please watch that video. I go much more in depth. For most people, they're going to want a 580 because they want to put the minimum down, which is 3.5% with an FHA loan. Just remember, the higher your credit score, the better your rate is going to be. And you can get an FHA loan and have an 800 credit score. So aim for as high of a credit score as you can. Watch my other video where I tell you some tricks to get that score up. Once I know your credit score, I'm going to be able to continue with the file. If your credit score is a little bit too low, I'm going to start working on your credit, and then we're going to stay engaged until that happens. So next, I'm going to determine your debt to income ratio. All right, so a couple things about debt to income ratio with FHA. Now a little back end. So there's two types of debt to income ratios. The first one is your front end ratio. The front-end ratio allows us to know the maximum monthly payment that you could possibly be qualified for. So let's take a look at an example. So we talked about the average salary being $75,000 a year for a family. So we're going to take that and we're going to divide it by 12, and that gets us $6,250 per month. Now, FHA allows for a front-end ratio of up to 47%. Now, I will tell you that I think a better rule of thumb for you is 45%. I see much more approvals with 45% than I do with 47. So let's be conservative and calculate that by 47%. So 6,250 times 45% equals, what is that? $2,800 a month. Now that is your all-in housing budget. What is your all-in housing budget? Let's think about it. You've got your principal, interest, taxes, insurance, mortgage insurance, and sometimes you'll have an HOA. So if you have any of those other things, we've got to add them. Now everybody's got taxes and insurance, and with an FHA loan, everybody has got mortgage insurance. Every property in every county is different. Some counties are high tax counties, some counties are low tax counties, some places have very high homeowners insurance, and some places it's very affordable. This is where your real estate agent or your mortgage lender is going to come in handy, because they need to know what those numbers are in your situation. So have them pull up a property so that they can average the taxes or estimate the taxes and the insurance for your local area. Also, if you're looking at an area with homeowners and associations, you're going to want to add probably on the high end of the average homeowners association, just for the purpose of qualifying. One of the big drawbacks to an FHA loan is the private mortgage insurance that you are required to pay. Now, the good news is in 2023, the government actually lowered the PMI to much lower. It used to be almost 30-40% higher than it is now. So in fact, for a lot of people, an FHA loan product is actually a better product for them than a conventional product, because the conventional private mortgage insurance is still high. So with an FHA loan, for most people, it's going to be 0.55% of the loan amount. Don't get too bogged down in that. Your lender is going to help you with that, but that goes into your monthly budget every month. So you need to know that you're going to be paying that. And one of the big downsides to FHA is that you pay that for the life of the loan. Unless you're putting 10% down, then you can get it off a little bit earlier. But just know, for the most part, you're going to be paying that until you sell the house. So now we know what our maximum budget is, and we said it was $2,800, right? So we can calculate our back end DTI. And this is what most people think of when they say debt to income ratio, because they're thinking of all of their debts. There's a common misconception that your debt to income ratio may include things like your utilities, but they really don't. We only look at debts that are paid on a recurring basis. So we look at your credit card debt, student loans, if you have another mortgage or investment property, we're going to look at all of those things, car payments. All of those things are big things that you're paying every single month, and that goes towards your debt to income ratio on the back end. So to get your back end debt to income ratio, we're going to take all of your debts and add them up and divide it by your gross monthly income. So let's say you have that $2,800 house payment you're hoping to get. So we're going to take that, we're going to add, let's say you have a $400 a month car payment, a $100 credit card bill every month, and a $150 student loan. We add all that up, and that's $3,450 a month. We take that and we divide it by your monthly salary of $6,250, and we get a debt to income ratio of 55%. This is why FHA could be such a great option for you, because over 50%, you're definitely getting denied for any conventional loan. Up to 57%, you could get approved for a FHA loan. So this person is still in play. So now that we have all of this information, we can take your file and run it through a desktop underwriting system to get a preliminary approval. And if we get that preliminary approval, then you should feel comfortable going out and looking for homes with the price point we've discovered for you. So in our example, we're looking at about $2,800 a month all in. That could translate to a different purchase price in every single market because of those taxes, insurance, The mortgage rate could be changing and fluctuating throughout the market season as it's been doing lately. So all of that's going to depend on the time and day that you're buying the property and where you're buying the property. So make sure that you actually talk to a lender before you go and see houses. The worst thing you could do is do your own calculations, not have your credit pulled, and forget that you actually have a liability on your credit report that's going to tank your debt to income ratio. This actually happened to me yesterday. I pulled someone's credit and they had a charge off from an account that they had years ago, and unfortunately for them, they haven't paid it, and that's fine. But it's tanking their debt to income ratio because it's showing up as a huge monthly payment. So what they're going to have to do is settle that before they can purchase a property. Now, if they went out and purchased a property or tried to put a contract on a property before knowing that, then they actually could lose their earnest money and be in a much worse position than going ahead and doing it in the right order, which is talk to your lender, get pre-approved, know exactly what your budget is, know exactly what steps you need to take so you can take advantage of the market when you find the right house. So we talked about how great an FHA loan can be, but I have to tell you that there are some pretty big drawbacks for an FHA loan, and you need to know about them. I mentioned before the private mortgage insurance is for the life of the loan of most FHA loans. Now, if you put 10% or more down, you can get your PMI removed from your FHA loan after 11 years. For most people using an FHA loan, they're only putting 3.5% or 5% down, and that means they're going to have private mortgage insurance for the life of that loan. Unless they sell the house or refinance out of an FHA loan, they're going to pay private mortgage insurance, and that really can add up every single month. Another drawback of an FHA loan is they have an upfront funding fee of 1.75% of the loan amount, and that's a lot of money. And that fee can actually be either tacked on to your loan amount. We could also charge you that upfront in terms of closing costs, and that's a lot of cash outlay. So depending on your situation, that might be appropriate, but you need to know that that 1.75 fee is non-negotiable and you will have to pay it. The maximum loan limits of FHA loans might be lower than what you're looking for in your area. So don't get your heart set on a house that's outside of that loan limit, because they will not loan you money outside of those loan limits. So if you are in a very high dollar area, an FHA loan just might not be appropriate for you. Another big drawback for some people is you can only have one FHA loan at a time. Okay, so if you bought your first home with an FHA product, you cannot buy a second home or investment property using FHA. But don't let these detractions keep you from using an FHA loan if that's your best path towards homeownership. I really think homeownership is just such a great vehicle for building generational wealth and getting yourself financially free. The average homeowner has a net worth that is 40 times higher than that of a renter. So I like to remind people that your first home finances your dream home, and the best time to get started is now. Of course, I'd love to hear your feedback, so give us a like or give us a comment. Let me know how you're using the FHA loan and what questions you have so we can be sure that we answer them on the next video. Until next time, have a great day.